Hey, how's it going, guys? For the past few months, the COVID-19 pandemic has created an extreme dichotomy between the clear winners and the clear losers among the different sectors in the US equity market. But it doesn't mean that every stock in the loser sector has no growth potential at all. In fact, now is a great time to look for the best quality high-growth companies in each sector to build a more well-diversified portfolio after the market correction. So in the next two videos, I will share with you guys the high-growth stocks are ranked the number one in each one of the sectors and help you guys find the best quality high-growth companies for your portfolio. If you are looking for new high-growth investment ideas, then the next two videos will be perfect for you. Alright, let's get started. In total, there are 11 different sectors in the US equity market. In this video, the part 1, I will cover the first 5 sectors, and in the next video, the part 2, I will cover the rest of the 6 sectors. Alright, let's start from the utility sector. Utility sector is usually considered a recession-proof defensive sector. Although most of the companies in this sector are mature blue chips with low growth rates, we can still find some outstanding companies with a relatively high growth potential. And among all of them, NextEra Energy, stock ticker NEE, is a clear winner in the utility sector. It achieved both the highest long-term growth rate and the year-to-date stock return. The company is expected to grow its earnings by 18.3%, that is leading the entire utility sector by over 220%. Free cash flow is expected to grow 14.3% year over year. EPS expected to grow 9.6% year over year for the next 5 years. And most impressively, with such high growth potential in the pure defensive sector, NextEra also pays a pretty good dividend with 2.1% yield and 11.8% year-over-year dividend forward growth rate. As we all know, high growth stocks usually do not pay dividends, so this is definitely a huge bonus to have, especially if you are also a dividend growth investor. All these growth metrics are ranked number one in the entire utility sector, beating every other companies in the same sector. NextEra is one of the largest electric power suppliers in the US and is also a leading company in the renewable energy. They are largely benefiting from the rising demand from consumers and increasing government support for the renewable energy. Especially if Joe Biden becomes the next president, the NextEra will have an even more aggressive bull run. Netflix has surged past many successful giants in the communication service sector. With share performance of 63% year-to-date, it also has the highest growth ranking in the entire sector. Forward revenue growth rate at 23% per year, forward earning growth rate at 51.2% per year, with EPS growth at an impressive rate of 48.6%. Despite a $230 billion market cap, Wall Street analysts are still expecting Netflix to grow averagely 36.1% per year over the next 5 years, beating other companies in the same sector by over 260%. From every single metric, Netflix is the clear winner in this sector. The story, of course, is that the millions of consumers are more likely to stay home in a more socially distanced world, consuming more entertainment in their living rooms rather than going to a movie theater or a live show. Although Netflix is facing two major growth headwinds. First, other media giant and tech giant companies including AT&T, Disney, Comcast, Amazon, and Apple are all joining the streaming TV business, which is causing an increasingly heated competition among users. Second, Netflix content cost keeps rising because they are paying more money than anyone else to the licensed TV shows and other content creators to make exclusive original productions for Netflix. But if you have been buying Netflix stocks long enough, you will know that these two challenges are nothing new to Netflix. Other company streaming services like HBO Max or Disney Plus are more like the supplements to the large library of Netflix instead of a complete replacement. And the high cost of new original content creation actually helps Netflix to raise the bar of streaming business and create an invisible moat around Netflix's business model because your $15 per month subscription fee suddenly becomes more and more valuable. And for the long term, that will help Netflix to build up the strongest pricing power among the other competitors. I have been buying Netflix since early 2016. It remains one of my favorite high-growth stocks of all time. And this year in 2020, I'm happy to see that Netflix is still ranked as the number one high-growth company in the communication service sector. A lot of investors still have the misconception that the real estate sector is nothing more than just commercial and residential properties. Actually, this sector is way much broader and much more profitable than that. And among all the companies in the real estate sector, Crown Castle International, stock ticker CCI, is arguably the fastest growing company. This is the Internet Cell Tower Investment Trust that is having solid growth as the next generation 5G service expands nationwide in the US. Different from 4G network, 5G network requires much more cell tower to operate. By buying CCI, you are basically the landlord of the entire US 5G network, collecting stable rental fees in the form of dividends and at the same time enjoying the potential massive capital gain. Thanks to 5G, the growth potentials for Crown Castle are extremely impressive. Forward free cash flow growth rate is at a 21.4% per year. EPS growth rate for next year is 26.3%, and the estimated long-term EPS growth rate for the coming 5 years is a solid 13.5%, beating the rest of the companies in the real estate sector by more than 280%. Of course, the more impressive part is a 3% dividend yield with an estimated 8.3% annual dividend growth rate for the coming 5 years. With such an impressive growth potential, ranking the number one in the real estate sector, plus the extremely attractive dividend growth as a bonus, Crown Castle is clearly the biggest winner in this sector. The outlook for 5G Tower Investment Trust looks extremely bright in the US. Recently, major investment banks upgraded the shares of Crown Castle, recommended the CCI, along with another two stocks, AMT and SBA, as the most attractive ways for investors to play the 5G network transition in the US. Despite the $1.6 trillion market cap and taking up more than 35% of the entire consumer discretionary sector, as one of the most dominating monopolies in the world, Amazon is still considered a high-growth company with a massive growth potential. Amazon's forward revenue growth rate is 22.9%, forward earning growth 25.6%, and the forward free cash flow growth is at a 30.6% year over year. And most impressively, the Wall Street analysts are estimating Amazon's EPS will be able to grow at a mind-blowing 32.1% year over year for the next 5 years. As we can see, all these growth potentials are completely dominating the rest of the consumer discretionary sector. This new trend of staying at home has turned Amazon into an indispensable company for millions of people around the world. No matter if this is just going to be a short-term event or a much longer consumer behavior shift, Amazon is definitely one of the biggest winners in this pandemic. Also, another huge reason those analysts are giving such high estimates on Amazon's future growth potential is their cloud computing and the big data business. Some major hedge funds are actually betting heavily on Amazon because they believe their cloud computing and the big data business can be way much more valuable than their online shopping, home delivery, and other services combined together. The stock has been always expensive and it remains so, trading at a 104 times earnings in 2020 and a 65 times 2021 estimated earnings. But being completely dominated in the consumer discretionary sector and ranked number one in pretty much every single growth metric, Amazon is definitely a must-have stock if you want to build a well-diversified high-growth portfolio. If you want to ask which group of stocks is the biggest winner in 2020, the answer is the gold miners, and most of them belong to the material sector. Among all the extremely profitable gold mining companies, Newmont, stock ticker NEM, is definitely the highest growing company with a massive growth potential. Stock up more than 60% year to date, beating every other stock in the same sector. Buying NEM stock is the perfect play on the increasing demand for gold and the potential massive bull run in the precious metals market, especially gold over the next 5 years. If you want to know more about why gold can be the best performing asset class over the next 5 to 10 years, I made a video especially deep dive into gold and did a detailed analysis on gold market. You should definitely check it out. I will leave the link in the description below. Alright, back to the video. Let's take a look at the crazy growth rate of Newmont. Revenue grows at a 35.6% year over year. Forward earnings growth rate is estimated at a mind-blowing 90.9%. Free cash flow is expected to grow 69% year over year, and the forward annual EPS growth rate over the next 5 years is a crazy 42.9%. Of course, there are two major factors that made analysts give such a crazy high growth rate estimates. First, the gold bull market is back, and it's expected to go much higher over the next 5 years. Second, Newmont's production costs are extremely low, at around $900 per ounce only, much lower than the industrial average. Newmont has one of the strongest balance sheets in the material sector, with over $4 billion cash, zero debt, and total liquidity of $6.6 billion. As a high-growth gold miner, Newmont is also surprisingly paying a 1.5% dividend yield, with an insane 39% dividend growth rate year over year for the past 3 years, and expected to continue growing their dividend payment at a 22.1% over the next 5 years. Ranking as the #1 high-growth company in the entire material sector, Newmont is definitely a solid choice for your diversified high-growth portfolio, especially if you're looking for gold miner stocks to ride along this new gold bull run. Alright, so these are the 5 high-growth companies that are ranked the #1 in the first 5 sectors I want to talk about in this video. In the next video, I will deep dive into the rest of the 6 sectors and share with you guys what are the best high-growth companies in those sectors. Cool, that will be the end of this video. If you are new to this channel, my name is Vic. I make videos every week to share some of my thoughts on what is going on in the financial market, and also what are the trade ideas or investment opportunities that you should pay attention to in the market. If you are interested in the world of finance and the business and find my videos being valuable to you, please consider subscribing. Thanks so much for watching, guys, and I will see you guys in the next one.